Some people love ARK Invest, some people hate ARK Invest, but many people love to hate ARK Invest. As always, we're interested in what we can learn from the world's most successful thematic manager. The third largest position in ARK's Autonomous Technology and Robotics ETF is Kratos, a company that we've never looked at before. If you're someone looking to invest in defense stocks with the sight of disruption, then this video is for you. Let's start by looking at the top 10 holdings for ARK's Autonomous Tech and Robotics ETF. So the first thing we'll notice here is that the constituents are relatively concentrated. So 33% of the weighting is in those top 3 stocks: Tesla, Teradyne, and of course Kratos Defense and Security. 63% of this ETF's weighting is in 10 stocks. Of these, 2 we're holding and 3 we're liking. Now for premium subscribers, if you want to see very quickly what we think about a particular tech stock, you can pull up our Disruptive Tech Stock Catalog. It has over 460 tickers, and I've simply filtered on a number of them here. You can pause the video and check out the commentary for each. These firms will check in at least with holds and likes. So we're either holding a stock, we like it, which means we'd consider holding it, or we're avoiding a stock. We check in with holds and likes once per year, and you can search our website for numerous articles on the above names. Now, 3 names not in our catalog that we're interested in looking further at. The first, Komatsu. So we covered them as part of a broader thesis. You can see here on the right, autonomy, electrification, and IoT and heavy equipment. That's a great piece and well worth a read. It also covers Deere, which happens to be in our catalog. Then you have 2 names that involve defense. So AeroVironment, this is a $5.2 billion company. We last covered it almost a decade ago. And in that piece, we noted that as of July 2011, AVAV, that's the ticker for AeroVironment, had provided 85% of all the unmanned aircraft in the United States Department of Defense inventory. So quite a formidable player when it comes to drone technology or unmanned aircraft. Then you have Kratos, the firm we want to talk about today, $3.3 billion market cap. We've never covered them as we don't do defense drones. So we cover drones as a thesis, but we've divided that into the defense types, which we don't bother looking at, and the commercial side, which we're interested in. But we've had this name requested numerous times by our premium subscribers who pay the bills, so we're going to cover it. Now, I'd advise you to be careful about Kathy's ARK. So that's a website that looks at the stocks Kathy's holding and the weighting of those stocks over time or number of shares. What we found is that, first of all, shares held doesn't consider AUM outflows, so you need to adjust for that. And second, the weightings chart, which is supposed to provide more color, is an absolute mess. And what we found is that this isn't reliable, and your best point of reference is to go look at Kathy's ETFs at any given time and figure out the data for yourself. Though Kathy's ARK can be useful in some respects, just validate your findings. Now, when we started researching Kratos, the first thing I came across was this investor brief from August 2017. You can see the America F*** yeah vibes here. So you've got a eagle riding on a rocket. And this deck, although dated, provided very little color as to what the company actually did. But it did lead to this particular chart I found interesting. This is the historical Department of Defense budget over time under different administrations, and this is remarkable. So what the last recorded value here, $700 billion, you can see there in 2009, close to $800 billion. That's a massive amount of money that the U.S. spends on defense. And when you consider countries across the globe and how much they spend on defense, United States dwarfs them all, with China in second place there and Russia in third. Now, what we often ask when we come across firms that dabble with the Department of Defense is what percentage of revenues are coming from that single client. We don't invest in firms as a rule that have commercial revenues lower than 50% of total revenues. So we don't believe that it's prudent to invest in a company that has a lot of their success tied up with a single client. It doesn't matter if that's Walmart or Amazon, how big or how notable the client is. It's a double-edged sword. And when it comes to the U.S. government, you're only one administration change away from disaster. So when we look at any particular tech stock, we take a red flag approach to analysis. And what we're trying to look for is a showstopper that keeps us from going any further. This initial analysis, the decision to buy isn't a part of that. So we like to keep a bullpen of stocks we like. And as always, the stocks we like the most, we're extremely critical towards them, and often pisses off the cheerleaders who don't understand how professionals go about investing using a consistent methodology across time that changes as we learn more. Now, multiple red flags add up to a showstopper. So if a firm has too many red flags, why would we invest in it? So the first two screens we give any particular stock would be whether or not they have revenues, and if those are growing consistently, that's highly desirable. Kratos does meet that criteria. They also exceed our $1 billion market cap cutoff at $3.3 billion, so we can proceed. Now, for those of you interested in understanding more about how we approach tech investing, we're going to do an overview in a coming video on our tech investing methodology. We're going to take a deeper look into drone stocks, not just defense, but that will also include eVTOLs. We're going to do a piece on defense stocks in general. We're going to do an update on AI drug discovery, and then a AI meets fintech stock that had a recent IPO we're going to take a look at. These are all pieces coming down the pipeline for our YouTube channel, so please make sure to subscribe and enable the notification button so you know when our new videos come out. Let's get back to Kratos. So revenue growth, as you can see here, as I said, consistently growing over time. That's great to see. But when you look at revenues from U.S. government agency customers, nearly 70% of revenues consistently over the past 3 years. That's a showstopper for us. Commercial needs to be a majority, but we're going to continue this analysis for those of you that can look past such a risk. So one interesting thing to note in their most recent press release, this firm doesn't have investor decks that accompany earnings releases, and we don't like that at all. We think that a firm ought to spend at least a little bit on investor relations and provide more than press releases to make it easier for investors to navigate the information. Here you can see their current guidance for next year listed along the top there, but look at the bottom here, operating cash flows. That's quite low when you consider over $1 billion in revenues, operating cash flows of $50 to $60 million. Then when you consider their capital expenditures of $70 to $80 million, that means their free cash flow is negative. Now, it's by a small amount, $10 to $30 million, and they do have $308 million in cash that provides a working capital buffer. But it's something to note when a firm, especially one as mature and established as this one, isn't generating positive free cash flows, or if they are, it's marginal. Now, what we then want to look at is what's the potential for this firm to be profitable in the future? In other words, what do gross margins look like? Well, those aren't very good. They're consistently under 30%. And I can recall we did an analysis not too long ago that looked at all of the 30 plus tech stocks in our disruptive tech portfolio and sorted them by gross margins. And I think 5 or so were under 30%, and of those, I think 4 out of those 5 were green tech stocks. So it's just this idea of subsidizing a plan until everything scales. There's not a lot of buffers here for a fixed cost contract overrun, such as those seen with large defense contractors. This has come up in numerous presentations recently, and Kratos does a good job of breaking this out so we can see these risks. Look at this. 69% of government solutions revenues are fixed price contracts and 76% of unmanned systems. So now we're starting to get into what they do, right? Are fixed price. You're going to want to watch gross margins very closely for problems. If they start to decline from the levels that they're at now, that's a concern. They don't have much buffer at sub-30s. Now, the two divisions that Kratos operates in, you can see them described here. Government Solutions is a whole lot of stuff. A lot of that is services. And the unmanned systems segment, this is what I think investors are attracted to, consists of the very cool drones they're building. And here you can see one flying alongside manned jets. And the basic thesis is something like war is going to migrate to drones fighting drones. Humans will be in the loop in a safe place. They can televise that on pay-per-view, and it's like the World Cup except less boring. Now, I happen to love the World Cup as a caveat for that, but you get the point. This cool-looking craft, the Valkyrie, has a lot of visibility for investors. We see a lot of people talking about this. Don't assume the exposure you're getting from this craft is high, because you're unlikely, or even exists, because you're highly unlikely to know what that ever is. Because one of the reasons we don't like defense firms is because it's always on a need-to-know basis, right? So when something great happens, look at this great thing happen. And when analysts start asking questions about potential problems, you're on a need-to-know basis. So they can really control the information they provide investors, which is often very little. And here you can see their appeal for unmanned aerial tactical drone systems. Focus there on affordable. They have 4 drones in this class flying today. Talk about having the highest performance unmanned aerial vehicles in the world. Perhaps that's the case. But when it comes to Valkyrie, this is very attractive, no doubt. So the Air Force has recently intensified this idea of having autonomous aircraft team up with piloted fighters. So you may have 5 autonomous drones flying alongside F-35s. These are inexpensive enough so that if one's lost on a mission, it's not overwhelming, and Valkyrie would likely cost between $3 million and $5 million a piece, up to $10 million with extra features. And then they say here that this was from a 2022 article that in 3 years, so that would be by next year, they could ramp up to produce anywhere from 250 to 500 annual units. And we simply take midpoints of these numbers, and that's a potential of $1.5 billion. So what are they actually doing? Well, here in the 10K, you can see $212 million. That's down in 2023 from the previous year. Those who are interested in drone exposure, you're going to want to watch this segment. And notice a couple other things here. So first of all, government solutions revenue. Notice how a big chunk of that would be services. We're not told whether the sort of services are scalable only by adding headcounts. Are they scalable like a SaaS model? We just don't know. 39% of the company's total revenues are service revenues. They're certainly growing at a decent clip, their revenues, but we're lacking a lot of color. Now contrast that to a company like AeroVironment, and look at this great slide here. It shows the breakdown by segments. You see this 3 segments here: loitering munitions, uncrewed systems. That's an interesting way to characterize this. Instead of unmanned, uncrewed, the subtle distinction being there that there's a human in the loop somewhere watching, right? And that's probably what they'll have for most of these, I would imagine. And then this MacReady Works. I'm not familiar with that. But the thing to note here is that AeroVironment appears to be doing some similar things, but look at their gross margins, right? So it looks like generally floating above 40, and then they sunk down in that quarter. So that's a quarterly basis. You may want to look at those annual. But the point is they have better gross margins and a lot more transparency when it comes to some great investor relations decks that help us understand what they do. Now, just some concluding thoughts here. Kratos doesn't care much for investor relations, and that's a problem. We don't invest in companies that have a majority of revenues coming from a single customer or entity like the U.S. Department of Defense or the U.S. government. They have all the power at the negotiating table. And as I said, you're only administration away from changes that could impact your company dramatically. We don't like fixed price contract risk. And props to Kratos for showing this, but that's not something we want exposure to. AeroVironment seems more appealing at first glance for those interested in this space. Now, we're likely going to do a follow-up on drone stocks and defense stocks, so stay tuned for that. Now, one defense dividend champion we looked at before, Raytheon, is certainly interesting. We put up this piece here for you to check out next. Give that a watch. Thanks so much for taking the time to watch this video today.